So I always run numbers for my people when I'm working with a client and they're saying, how do you use a line of credit with a HELOC? Or what's the difference between using the HELOC or Money Max? I'll just use a HELOC. I run the numbers, and I'm going to run some right now for everybody to give you an idea compared to what the cost of Money Max is to what you're going to be paying in mortgage interest. And I have the Money Max myself. So even though I know how to use lines of credit, guys, I have the Money Max because and I'm saying when, because I'm going to buy that property in Delray Beach, right beside you. So I'm going to buy a property one day, and I went ahead and got the Money Max so that when that happens, I'm going to do both. I'm going to use the Money Max, and I'm going to be chunking down my HELOC. I have this plan in my head, and it's going to work.
Oh, if it's a plan you have, it's going to happen. I'm already convinced of that.
So here's the deal. And we're going to start with a basic property, $250,000. Okay, so let's say that you got a $250,000 home that you're wanting to purchase today. And you said, hey, you know what? I'm going to see how Money Max will kind of help me out with that. Now, I'm going to figure it at 6%, and that's kind of low to what today's rates are. But I'm going to go ahead and I'm going to say 6%. And we're talking about an amortization schedule of this mortgage that I talk to you guys about all the time. What it's going to show me is your payment is going to be right at $1,500 a month. So $1,498.88 will be your monthly payment, and this is just for your home loan. This is not for your property taxes and insurance. Okay, it's going to be higher, but this is what your payment's going to be on this $250,000 loan. So when I go to the table and I look, it shows me, and this kind of makes my stomach hurt. Because this shows me this is a 30-year mortgage, and we're talking 30 years of $1,498 payments for 30 years, guys. Your very first interest payment out of this $1,498 is $1,250. Did you all hear me? Do you know what that is in 1 year? Let's just do it. 1,250 times 12. $15,000. You're just going to pay an interest in the first year of this mortgage. So $15,000 in interest only. You get $250-ish going towards your home. How long is it going to take you to pay off a home that's $250,000 when you're applying about $250 a month for the first year?
30 years.
This balance. 30 years. I hope that people understand when I talk to them about the mortgage and, any loan, but about the mortgage because it's so large and you're dealing with this kind of interest, $15,000, like I said, $1,250 goes towards the interest only. Okay. If some of this was going towards our balance, it might be okay, but interest meaning go down the road, roll down your window, and start throwing cash out the window. That's literally what you're doing with the mortgage.
Yeah.
When you don't have to. So back to what I was saying about the cost of Money Max. $15,000 you're throwing away in the first year. Just the first year. So if Money Max were to cost you like $4,000 and then eliminate a lot of your interest, doesn't it kind of pay for itself in the first couple of months?
Yep. Generally, we find it's about the first 4 to 6 months, just based on the profile because of the interest that's being canceled. And you talk about that a lot, but I think it kind of goes over people's head a little bit, right? You have to pay back the principal, but a big portion of the interest is optional because it's not just the interest rate. It's how that interest is calculated, how those finance charges are assessed, and how when the payments are applied. So using this technology, this algorithm, and some factorial math engines and all this other cool coding tech stuff, it's actually being able to dictate how to help you bank like a bank to turn the tables on the system so you can save 60, 65, 70, even 75% of the interest you pay. If you can eliminate 2/3 or 3/4 of the interest you pay, you're going to pay it off in 1/3 of the time. And now that money can be redirected to the bank of you instead of the actual bank down the street.